Okay, welcome back, everybody. It's my honor to introduce the next guest for the TraderLion conference, Christian Fromhertz, the CEO of the Tribeca Trade Group, and also one of the top performers in the U.S. Investing Championship of last year. It was great to see him, compete and do well as well. So, Christian, thank you so much for being here, and welcome.
Yeah, thanks for having me. This is great. I really appreciate being part of this, and I can't say enough about the conference that you've given. This is the fourth day, so I hope that you're holding in there because you've done some great interviews. Just awesome to kind of listen to trader after trader, break down their history and their background and some of their demons too, and how they've conquered them. There's been, I was listening to some interviews earlier today, and it's been awesome.
Yeah, we're super happy with how everything's going, and I'm looking forward to this one as well, Christian. You're somebody who I've started to follow a little bit more closely over the past year or so on Twitter, and I've learned a lot from you, and I got to meet you in person in Vegas, which was super cool, and yeah, I'm looking forward to this. Let's dive in.
Okay, cool. Okay, so first thing, the risk disclaimer. So I'll try to, keep things light a little bit in this, but one of the things is you're going to hear me, and I do this in my end of day videos too. I mention quotes from different traders, really things that kind of hit home with me, but I'm not always 100% accurate, certainly on the dates. And if I get a quote wrong from somebody, you could feel free to hit me on Twitter and so forth, but don't, don't take it too seriously. Because I do from time to time get a quote wrong. But the bottom line is you want to be able to kind of pick up on different things from well-known traders and investors and incorporate them into your system. Again, it doesn't have to be perfect that you get, all of their philosophy or quote down and so forth. That said, here's my background. I did put a new picture up there. That's more of a bull market picture. So I don't know. Maybe I'm kind of thinking things for the second part of the year. Eventually, when I change my profile picture on Twitter, so that this is more of my bear market picture. So when I change that, then it might be on. But listen, joking aside. So my background, and I've got a couple jokes in here, I started way back when, basically back in 1998, 1999, when I started my path in terms of investing, right out of college, going into, working for a brokerage. I had a long journey. I have a joke in here too. I was the fifth grade president of my baseball called trading club. So, that was something, of course, that, I think is kind of funny, but at the same point, you start young with, competing and doing different things and having interests. But regardless, I worked for a couple of years at Morgan Stanley Dean Witter. That's a name that you don't hear too much anymore, Dean Witter. That wasn't the optimal job for me. So after spending a couple of years, that was more a financial advisor, is very sales oriented, which is, by the way, a great thing to learn. You do have to know how to sell a little bit, right? The phrase "sell me this pen." That's very funny, but it's also you do need to be able to sell and to get in front of people and to be able to have conversations and so forth. So every one of the jobs that I've had, even though they may not have been the optimal thing for me, I always took the approach of like, hey, well, while I'm here, I'm going to try to learn everything that I can, because it could make me better and make me a bit more well-rounded. So I took some time off a little bit to kind of get realigned to where I wanted to be, which was trading, more, much more trading versus sales. And I went back to school. I got my MBA from Rutgers. I am from New Jersey originally. My concentration, or what I really do, is trend trade. We'll talk a little bit about that in the next slide. I did move from, sorry, that's kind of in the middle of there, but it's a little bit out of context. But after I did that, I did work my way up at Merrill Lynch, right? I wanted to get into institutional trading. The issue with that is, as many of you may have known or experienced, if you've tried to get into trading is that they just don't open the door for you, right? You really have to go to either an Ivy League school or know someone to get you into institutional trading. So I went kind of the indirect way. I worked my way up through like the middle office operations at Merrill Lynch and just made it my goal. And it was a big challenge to get to the trading desk. I did that after a couple of years, and I actually became a manager, going back to like, hey, this isn't where I exactly want to be, but I'm going to try to take advantage of everything and try to do well at that particular role. And that got me onto the trading desk. And I started doing that right around 2003, 2004, and experienced some great years trading at what's called the Delta One trading desk, which trades a lot of different products, all different types of things. And I made markets for domestic, international, fixed income, any type of ETF that's out there, which kind of goes, and I've built upon that in my trading as I've gone on. But, I went through many different interesting times as an institutional trader, the 2008, 2009, credit crisis, and seeing that prolonged bear market, that was a big eye opener for me. That was something, from when I started my career and seeing the dot-com bubble. So there was a lot of things that, it was a different type of bear market, different type of correction, but there are some things that rhyme, right? You hear that a lot about bull markets and bear markets, is that history doesn't repeat, but there's a lot of things that rhyme. There were certainly a lot of things completely different than what we experienced with the dot-com bubble. But the credit, the credit bubble, the credit crisis was something very interesting at that time. And then to see the market kind of build from that level, right? And the sentiment got so washed out. The Fed also became a big part of that, right? And that kind of brings us a little bit to what we're experiencing right now. You want the Fed to be your friend, right? So that's something that we're going to get into. And then to kind of fast forward, I started the Tribeca Trade Group about 6 years ago. I really wanted to kind of bring, I loved working on an institutional trading desk. I stopped doing that, I think, in 2013, and decided that I wanted to trade on my own, kind of be a little bit more of an entrepreneur. So I've been running the Tribeca Trade Group for about 6 years. I didn't know about the USIC, until about 2020. So I decided, by the time I learned about it, it was like halfway through the year in 2020. So I entered the 2021 U.S. Investment Championship, and I finished third in the Enhanced Growth Division. So we'll get into a little bit more of that, because I want to talk a little bit about a few lessons from that. And there's a couple other bullet points too, but I think that's enough about my background. I wanted to get just, first a couple of beginning thoughts. And I've listened to so many of the interviews over the last week, and there's a lot of adjectives to describe them, but they've just been tremendous, right? They're really great for, I don't even think it depends what your level of trader is, whether you're a beginner, whether you've been doing it for a while, or whether you've been doing it for a long time. To listen to some of these interviews and to some of either the winners of the U.S. Investment Championship, or just traders who have been doing this for a long time, the takeaways are just unbelievable from mindset. And we're going to talk a little bit about that too. But I just want to say how great it's been, listening to the conference over the last week. One thing that I've taken away from the conference, and of course I know a lot about this subject too, but you've heard throughout this William O'Neill over and over and over. So there's something to that. If you haven't read the book, read his books. They're not expensive, right? And that's the thing about education right now. You don't need to go get your MBA, right? You don't need to go and to do the CFA, right? You could just buy a couple books, and the wealth of information that's in these books. You've heard trader after trader talk about William O'Neill and how to make money in stocks and Can Slim. So I can't recommend that enough. I reiterate what you've already heard from a lot of speakers about the lessons that have been taken away, and the different chart patterns and recognition. So I won't spend too much time on that, because I think it's been so well covered, but I just wanted to have a bullet in here about just one of the common themes that I've heard over the last week. Another one too that I talk about this quite a bit. This is a great year to learn and grow, right? For example, versus 2020. I mean, that was a great year, in terms of trading. It was a phenomenal year, but in terms of learning and growing, I don't think that year was very good, because the market does cycle, right? What we're experiencing this year, it's good to really write down what you're experiencing and learn lessons. I back, just a couple quick stories, but back in 2020, right, I was still kind of trading a very disciplined approach. And, if I had a loser, I would, of course, take the loser off, which I'm going to go through some detail about that and particulars about that. But what you found in 2020 was not a very good, what's the right word? Approach. I saw a lot of people who had a loser and they weren't taking their losers off. They just felt that the market was going to bail them out, right? And that's not something that I thought was a great takeaway from 2020, that the market is always going to bail you out, right? And people just, oh, I'll come, if it didn't work, if a trade didn't work, you didn't hear about it anymore. Like, I was like, hey, what happened to that trade that you put on? How are you managing that? Oh, well, it'll come back, right? Well, if you fast forward to what we've experienced that year, if you've taken that approach, you've been hurt pretty badly. So I reiterate that this has been a great year to kind of pick up on these things. This is more where you're going to really want to have that approach to kind of carry you through the years ahead. That you can't just leave a position on, neglect it, and think that it's going to come back and work for you. You have to actively manage your positions in trading. Okay, so and again, if you're down about this year and so forth, there's going to be some things I'll talk. So I'm trying not to get ahead of the presentation, but you've got to keep a positive attitude at this point and realize that things are going to get better, which brings me to the next bullet point here. And that's, all bear markets end. Right. I was gonna ask Richard this, but I'll ask him when he comes back on. Right. All bear markets end. If you go through any one of these bear markets, like 1929, all right, 1987, there was a market crash. The dot-com bubble, which I already mentioned, the credit crisis, right? What we experienced in the beginning of 2020 as well with the pandemic, right? What happened at the end of all those? Well, the market ended up going higher. So, it's important to be realistic and to understand that you really want to dial down your risk in bear markets, right? And be patient with bear markets. But, in my opinion, you don't want to go all doom and gloom, right? Because I've never seen in the U.S. market, in the history of the U.S. market, go down to zero, right? Every one of those situations, right, the market has ended up higher. So it's just something to kind of keep in the back of your mind. I'm not saying that happens tomorrow. I'm not saying that we make it back to all new highs this year. My point is, be patient and be somewhat in the middle, right? And not be perma bear, not be perma bull either, right? And just be open to the market in front of you. All right. And then I have another one in here too, which is kind of specific to me. Obviously, if you're a newer trader, I don't think that the USIC is for you per se, but I think that if you've gotten to the level, right, I love to compete, right? I'm going to talk about sports. I have a lot of sports analogies that I'm going to throw in this presentation. I love it when trading and sports kind of align together. So I'm going to talk about a couple of these, but I love to compete, right? So I'll be in that contest next year. Now, I'm honestly, I'm not going to be in it to win it. And it's been great to listen to some of the champions and how they've done it, right? I love to listen to Mark Minervini, right? Which Richards has a couple great interviews with, right? But the way that they traded, right, is specific to them, right? They went high into leverage and so forth. So my goal for next year, provided that I do compete in it, will be to finish in the top 5, because I know myself, right? Going into high leverage is just not going to work for me. I don't feel comfortable doing that, and we're going to talk a little bit about that. We're going to talk about developing your own system, right? You can't borrow conviction, and you can't borrow someone else's trading plan 100%, right? You've got to make it unique and personalized to yourself, right? You just can't do those things and think that you're going to replicate someone's system perfectly, because we're all unique and we all have different personalities. So it's important to remember that, and to pick up different tidbits from people's trading plans and and some of the successful things that they've had, benchmark, right? But to think that you're going to follow someone's trading plan 100%, that's not going to work either, right? You've got to develop your own your own system, right, and your own risk tolerance. So I just thought I would bring up a couple books, because I know that's a popular subject here, is to kind of go over like some of your favorite books and some of your favorite sayings and so forth. So first of all, I've got a title here, I've got a headline, which is trend trading, right? I think most of the successful traders that you've heard from, right, are trend traders, right? The system does work. It allows you to be disciplined, right? I'm also a swing trader too, right? And that swing trading really does change with the market that's in front of us, right? So I like to be more of a medium-term, long-term swing trader. But if it's not there in the market, right, then you have to change that style a little bit. You cannot stay rigid, right? So a couple of books that really were really kind of the light bulb went off for me is when I read The Complete Turtle Trader. I had listened to Richard Parker do an interview like probably about 5 years ago with Bloomberg, right? And talking about, basically it just was a very, very interesting story to me that, and if you haven't read the book, it's essentially about taking traders off the street and, provided that they had some basis of discipline and so forth, but teaching them how to basically make money in stocks without a background in finance or economics and so forth. And the results were very interesting. So it was just very eye-opening to me. Also trend following by Covell, right? So that's also just very interesting to me, that you can have all these opinions about the market, but what I really like about trend trading is you could follow a system. It doesn't have to be super complicated, right? I do like to keep it simple, right? In trading, when you can come up with something, right, that is very simple but makes you money, right? There's something said to that, right? You don't have to get overcomplicated, right? So it's nice to look at other things besides price, which I view as always most important, right? You could look at indicators, or you could look at some of the things that go behind the scenes, but really price and following price is going to give you a lot of the information as well as the trend. Another point that I heard last week, which was Larry Williams that did an interview with Richard. I think it was last year, but they were nice enough to play this during one of the intermissions between the interviews. And he said, the only way that you're going to make money in this market, real money, right, is to have a trend. You need a trend to be able to kind of, follow to make money in and out. If there's no trend in the market and we're going back and forth, it's extremely difficult to time the market, right? Especially in the short term, right? It's one of the hardest things to do. But if you've got a trend and you're sticking with it, right, it's just a much easier route. And that's I think why you've heard so many successful traders incorporate some type of trend following dynamic into their trading system. All right, so number one, like, be able to identify the trend, right, and make adjustments. Right. The majority of money is made in the overnight markets. I don't have the statistics in front of you, but you could Google this, right? Look at the overnight market versus, so for example, this is very simplistic, but if you were to take the difference between, like, if you purchased every time at the open, right, and sold at the close, versus if you bought the close and sold the open, the statistics are dramatic in terms of over time. Again, this isn't just this year. This isn't by any means this year, but if you look at it over time, by buying the close and selling the open, it's something. The results are so ridiculous that you want to take note of it, right? And when you have trends like that in the market, right, you want to know where the edge is in the market, right? So, sometimes I've heard from day trading. And by the way, if you're a great day trader, stick to it. I'm not discouraging day trading, but if the majority of money is made from the close to the open, right? It's something to be mindful of. And I think what happened to a lot of traders over time is they were like, everybody has had that one loss in the overnight market where, a company came out and they gave results or guidance, and it wasn't very good, and the stock's down, and you're like, geez, I'm never doing that again, right? But that could be bias in the market, right? That's an outlier, right? And over time, you'll find, and it's funny, just the psychology of trading and investing. Those things stick with you when you've had that situation where you were long a stock and something happened, and boom, the market didn't even open yet, and you're down money, right? But really, when you think about it over time, those are the outliers, but they leave scars. So some people do make that transformation. They're like, oh, I'm never doing that again. I'm going to stick to day trading because I could see the market in front of me at all times. But I've found that the more money can be made when you're doing more swing trading and when you are holding through that overnight session. All right. So a little bit of a controversial subject there. But and then the last subject, the last bullet here is, it doesn't have to be super complicated to have rules based on trend trading. They could be moving average crossovers. They could be the 20-day moving average, the 50-day moving average. There's many different ways to make money, and there's no uniform way. It really depends on what you're comfortable with. All right, so here's the first the slide that I wanted to bring in that has a little bit of sports to it, right? And this is this is from Ted Lasso, and this just hit home with me. It was funny watching it, but in trading, you have to be a goldfish, right? You have to have a short-term memory in this market, right? You have to keep moving on, right? You can't dwell on things that don't work out. So this bullet point I thought is useful. Jim Simmons, right? So Renaissance Technologies. He's one of the most famous hedge funds investors out there, right? And you would think, right, if you didn't know what he was doing, oh, geez, he must have a 70-80% win ratio. Nope. His ratio is just above 50%. It's 51%, right? So that means, of course, that means 49% of his trades are losers. So how does that make sense, right? And I think putting that in front of, to hear that he's one of the best at this game, right? And he's wrong 49% of the time, right? How does that work out? Well, there's a couple things. You need to come to terms with, how you're going to manage that, right? And that means, of course, that you're going to have losers in this market, right? And that's where you have to have that short-term memory. You can't dwell on, oh, geez, I did all the research here. The setup looked beautiful, and the trade just didn't go the right way. Well, you move on, and that's why you have your stop prices, right? And that's how you manage the losers, right? And it was talked about earlier in one of the interviews earlier about, Twitter, and how Twitter can be, there could be some good things and there could be some bad things, right? On Twitter, hardly anybody talks about their losers, right? When they have a winner, they talk about, how the setup worked for them and so forth, right? But you have very little people talk about the losers. But I'll tell you, getting out of the losers quickly when you set that stop price, right? That is really, I love it when I see, hey, I got out of a trade that it looked like it wasn't going right. And then you look back a week later at the stock and wow, it went down another 5 or 10%, right? I actually feel really good, about that, about how I manage that. And specifically this year, I talked about, about 5 or 10 minutes ago about, the year 2020 and how this is not the same as 2020. This year is kind of, this is not how all years work, but if you kind of mesh the two, right, how you manage the losers could make or break your year. So this is a very good year to understand that. 2020 really allowed the market to bail you out of bad trading, right? And that happened to everybody, a couple of years ago. All right. So discipline is a big thing. So I've got a couple bullets about that. So cutting the losers, right? No big losers. That is a huge thing, right? That can really, in a year like this, where we are in a bear market and the trend is down right now, if you continue to pile up big losers, right, it's going to be very difficult to come back from that. Right, to be able to either have a positive year or outperform the market, right? So it's, having the big losers, that's something that you do learn over time, that you just can't have a lot of them, right? And especially in a more difficult market environment. All right, so that's a big thing. Also, the paper cut losses, like I don't mind the, having those small losers, but you have to be careful of those too. You don't want to keep piling up the paper cut losses. If that continues to happen, right, that's going to turn into this, right? That's going to turn into a big loser by, that. So it could be just the amount of trading that you're doing in a bear market, right? So I'll get to that in just a second too. Some tips about that. But riding the winners, of course, right? Yeah. So that also has to come into your trading plan, right? How are you going to have some winners, right? In this market, it's tough because you get a winner and you want to grab it right now, right? You want to take it. That's not the worst thing to do right now in this market. But when the market does get a little bit more constructive, you are going to need to have those big winners, right, to average out. And that's how Jim Simmons does it too. Again, I'm not speaking for him or something, but if you look at the percentages, he has some really big winners that level out that 49% losses that of trades that he takes on onset. Right. And this really comes in terms of defining your trade before you get into it. Right. I get it. Sometimes, we all get excited, right, during the day when we see a setup and we're like, hey, this looks great and so forth. Right. You get into the trade and then what? Right. And then there's some emotion that happens as once you're in the trade. So if you could define all this, even as you're getting into the trade, right, where's your stop price going to be? So one of the first things, just to kind of bring you through like a quick trade, but one of the first things, as soon as I get into a trade, right, I'm establishing my stop price every single trade I get into, right? I want to know where in my idea I'm going to be wrong, right? And this is where it's kind of the thick skin comes into play, right? It's going to happen, right? Some trades are just not going to work out. So you've got to kind of come to grips with that. Also, besides putting an alert in place for where my stop price is going to be, and there's soft stops, I'll never I'll never put my actual, like a hard stop, right? I'm going to put an alert in place to say, hey, your price is getting close to your stop, right? Then I can evaluate it then, right? It's not to say I don't want to bring down my stop price to another level, right? But I want to just, depending on the time of the day, right? The market may have just been, a sell order, a sell program that washed through the market. So I want to give it a chance, right? The goal is not to I'll get this questions from newer traders. Hey, the trade that you put on, it just hit the stop price. How come you're not out of it? Well, I'm watching it, right? And, I'm going to give it a little bit of a chance to recover. And if it doesn't, and if the market looks weak, I'm out, right? But the goal is not to take the stop and to get out of the trade right away. It's to have a guide in terms of, hey, let's put together, let's have a trading plan for this trade, and let's monitor what happens, right? And if we get to the end of the day, so part of it is like, hey, let's see if the name can recover a little bit before the close. If it doesn't recover before the close, boom, I'll take the stop, right? But I don't want to see that situation where the market drops for 15 minutes, 15 minutes later it's higher, and 15 minutes later higher, and then hey, I got stopped out, and I didn't really need to take that stop. So again, it requires a little bit of feel, and that's something, it feel and experimentation. But the bottom line is make sure that you have a stop, right? And knowing where your idea is not going to work. Same thing with targets, right? I'm going to get into that with Trading Edge, right, and the system that I use, but setting targets along the way is very important. Right. So I'm going to move ahead a little bit. I'm just looking at the time and seeing how much time I've got left. But, we talked about soft stops as well. Right. So we talked a little bit about mindset. Another sports comparison that I like to talk about a lot with trading. Right. And so Bill Belichick, right? If you've listened to any of his game interviews, post game interviews, right? It's similar to listening to one of the Fed speakers talk. It will kind of put you to sleep a little bit, right? He doesn't give out a lot of information. Every press conference, hey, do you think you're going to win the, it could be in the middle of the season, right? And they'll ask him, hey, do you think that you're going to win the Super Bowl? Oh, well, we're going to concentrate on our next opponent. We're playing the Steelers. We're playing the Jets next week, right? We're going to focus on them, right? And so he never answers that question about whether they're going to be in the Super Bowl, right? But he's got a game plan, even though it's not maybe the best for the press conferences and not the most interesting, but the guy's got a game plan, right? And he knows that if he concentrates on what's in front of him, right, and not worrying about the end of the year and what his numbers are going to be, right, he's going to get to where he needs to be. So you got to be kind of focused. And one of the things too that I just wanted to bring up really quickly was how many of these presentations have you heard where the speaker made a prediction about if the low is in for the year, right? Nobody has a better crystal ball than anybody else, right? We don't know if the low is going to be in. We do look for indications and spots that we're watching, right? And how we're going to react to certain situations. But nobody's making that crystal ball, prediction that I think is a really successful trader that knows whether or not the low is in for the year or whether we're going to be at all-time highs at the end of the year, right? You trade the market in front of you. You play what's in, directly, in front of you. Another thing about Bill Belichick, other than he was a Giant coach originally, which I'll revisit that at the end of the presentation, but because I'm a Giants fan. But another thing is, halftime, right? What happens at halftime? Sometimes, the Patriots, again, this is not to say if you're a Patriots fan or if you hate the Patriots, you kind of just have to have a little bit of respect for what he does, right? At halftime, the Patriots may be losing, but they make adjustments at halftime, right? So they deviate from, hey, if their game plan wasn't working in the beginning of the week or the beginning of their game, right? They're going to make changes as the market changes, as their opponent may have done something. So again, just a lot of, I love the comparisons between sports. I know some of them are a little bit cheesy, but I think it's very important, right? And to win one game at a time, right? And I talk about that, win 1 week, right? Make sure that you do things to set yourself up for success rather than failure. And that's being disciplined, right? And that's putting in the time and the research, right? So let's see, I hope I didn't lose any. I think I'm okay.
Yeah.
Sorry, I just had a flat.
Yeah,
good. Good. Okay. So yeah, I mean, competing, right? And this is kind of nice, in terms of my football example, right? You're not playing the Steelers. You're not playing, Kansas City, right? You're competing against yourself mostly, right? Now, of course, right, the market is changing, so you're competing with what the market is giving you, right? But you really have to trade what the market is giving you, right, and not what you want the market to be. So that's a lot about competing against yourself, and making sure that you're doing that you're not getting overly exposed into a market that is not giving you a lot of opportunities, right? It is what it is, right? We don't have the luxury of a market from another time, right? We have to be patient. Also, we can't blame the market. We can't blame the Fed speakers, the politicians. We have to trade to the market that we're given it, right? And it's important too. Don't mix your political view, whatever it is. Don't mix that in your trading. Right? They're two different things. So, be mindful of that, right? You want to trade the price action, the trend, and so forth. Forget about all the other things. It's important to note, what the Fed is doing and so forth. But to be angry and to you can't put the blame off. Oh, why'd you do bad this year? Oh, it was the Fed speakers. That's not going to work. At the end of the day, that's not going to work for your trading success. All right. So again, greatest competition is ourselves in general. So it's important to have long-term goals, right? But also you have to set the parameters on how to achieve them. So that's why I think, focusing on the short term, right? And, I send out, a P&L video to to my members where I talk about at the end of the month, we talk about the review process, right? And I talked in depth about, hey, the month of July, what are you looking to achieve? Well, you've got to set attainable goals. This is not an easy market to trade. So saying that you're going to be up 20% for the month of July, well, that's great that you're going to put out that goal, but is it attainable? Probably not in this market unless something really changes. So thinking about how you're going to maybe beat the market, right? And outperform the market a little bit, but not getting over the tips of your skis in terms of taking risk to achieve those goals. So when I set my goal for this month, it's not to have extraordinary goals, right? It's really to be realistic, right? A lot of that right now is taking profits often, right? We're not seeing right now I'd say for the last month and a half, 2 months, the market's actually gone sideways, right? Now, of course, it's in a downtrend. But when you look at different sectors and so forth, there's been several sectors that haven't taken out their lows. There's been some relative outperformance, and there's been, of course, some underperformance with some other groups too. But still, and when you're going back and forth like we have in the last couple of weeks to last month or so, even in a sideways market, you do have to take profits, right? And set those realistic price targets for your trades. And then one other thing too I wanted to say here is what's very important too, and I don't talk enough about this, but taking time away from the screens, right? For me, the weekends really help me reset and gain perspective, right? I tweet a lot, but I don't do a lot of tweeting on Saturday, right? I need a little bit of a break. I need to reset a little bit. And that, getting away from the market. And I actually enjoyed a couple of weeks that we recently had where it was a 4-day week. I was like, this is great. It really helps me say, okay, do some things away from the screens. And believe it or not, it really kind of gives you perspective, right, about what you're dealing with when you're in, when you're grinding like we are every single day in this market. It could really wear on you. And I think several speakers talked about that, right? So you have to stay fresh, right? I do think that we're going to get out of this bear market because all bear markets do end, but you've got to be fresh and you got to be ready to go. All right. So of course, bear market, of course, what is a bear market to me? We're trading, price action is below the 200-day moving average. It's also below the 50-day moving average. There's been many points that have been made over the last week. 50-day moving average is a great guide, right? When price is trading over the 50-day moving average, you've got some strength, right? If price cannot get over the 50-day moving average, it's just weak price action, right? It is what it is. The more that you see names underneath their 50-day moving average, right, you know that you're just dealing with a market that is just not ready yet, right? And you got to be patient. And again, that word realistic comes up again. Right now, you just have to be realistic with this market and be patient, making adjustments, right? So again, I would love to be doing more longer term swing trading, but that's not working right now in this market. So you've got to make those adjustments. Position size, right? That has to be dialed down right now in this market, right? It's just too much back and forth. A lot of times we've seen this year, I haven't even shown a chart yet, but I will, talking about like how many times that we've basically come up towards, a moving average, the 20-day, the 50-day. And right when we're about to break, right, it could be to, people are watching to the upside, we stall there. Right. So, if that happens, right, and I talked about paper cut losses, right, but the bigger position size you have in this market, the more it hurts, right, and the more it hurts your bottom line. And at the end of the day, this is more of a, survive and advance type market as we go sideways, right? So, I have a couple other things in here. Of course, no chasing, especially in a bear market. You just can't do that right now. That's a recipe for disaster this year. Also smaller quantity of trades, the duration of trades. I talked about more shorter term swing trading. A couple of things that help me too, besides looking at the overall price and trend, is looking at things like the McClellan Summation Index. I look at this both for NYSE and NASI. I like to know basically if we're swimming upstream or downstream. right? That's a expression that I use over and over. Also, is the wind at your back or is it in your face, right? You want to be adding more risk, in my opinion, when the wind is at your back, when things are easier. Right? You don't want to be struggling. Sometimes it's one of the things that I find newer traders do, right? Sometimes the more complicated it is, like the harder the puzzle is to solve. People like challenges, right? But with trading, of course we like challenges, but we want to be trading when it's easier, right? And when the wind is at our back. And what I mean in terms of that is when there's more things going up versus more things going down. So looking at an advanced decline line and looking at the NICE and the NASI and maybe putting a 10-day moving average just to give you a guide to see if, hey, are we currently, even though the market's been going sideways a bit, are we in a little bit of a short-term very short-term uptrend. And those things help me. When I see a bearish crossover with the 10-day moving average, it's kind of a little bit of a pat on the back for me to say, hey, dial down your risk, right? This market's starting to roll over again. Even under the surface, right? Even if the price hasn't taken that turn down, right? When we start to see more decliners versus more advancers, sometimes it's a clue to say, hey, something's changing in this market. So on the downside and on the upside, that works very well, I think, for the summation index. All right, so this could be the last sports analogy. So it's wait for your pitch. I love baseball, the analogies with baseball and in trading, right? Just like I talked about with football, right? Well, you don't have to worry about playing, preparing for your opponent every week. Your game is against basically yourself, right? And how much risk you're going to take and what type of trading you're going to do. Same thing, similarly with baseball, right? You don't have to swing at every pitch, right? You could wait for your pitch. By the way, this is one of my favorite movies, The Moneyball. It's also a great book to read as well. I love books like this. And there's a lot of parallels in this in trading as well. But wait for your pitch. Be patient, right? There's no one that's forcing you to say that you've got to, swing at an outsized pitch or a nasty slider, right? You could basically do that. So I wanted to talk about, basically a little bit more. So I've talked a lot about some high level things and mindset and some best practices and some things in a bear market, but these are also some things, in regular markets time. So first of all, watching, monitoring, and scanning, right? That's also comes with, waiting for your pitch, right? Just by monitoring and scanning, it doesn't mean that you need to be trading, but you still want to be monitoring and doing the research. Right? These markets are a puzzle, right? We talk about some things like, even the NICE and the NASI that I just covered. Well, that's just a piece of the puzzle, right? There's not going to be one thing that is going to tell me, hey, that's it. This is, this is where you should go long or go short. It's going to be a combination of things. The Fed is a big thing, right? You hear that phrase all the time. Don't fight the Fed. Marty Zweig said that, right? It's very much what we're experiencing right now. Now, again, you still have to monitor for things because, look at what happened last week in the market, right? They were almost pricing in 100 basis point rate hike for coming in just a couple of weeks. The market didn't respond that badly to it, right? So there's some other dynamics going on right now. How much is already being priced into this market? What's going on with positioning? Right? Are people really leveraged to this market? Are they underweight this market? Are they short the market? All of these dynamics are different pieces of the market puzzle. So it helps to have some context to say, okay, yes, the Fed is still going to be raising interest rates. That doesn't make me want to go crazy into risk and putting on risk while they're still doing that. But, it could be that we're getting closer to the end of that, or maybe we're halfway through, we're some point. And again, I'm not making any conclusions by this, but the price action should be telling you something that, the market has been going sideways for a couple of weeks and even a couple months, right? We haven't, gone through the lows. Of course, little things like don't overtrade a tough market, don't short a dull market either. We talked about the 50-day moving average. Stocks, this is a big thing, right? So going through the monitoring and watching. Believe it or not, you will see some stocks begin to march higher while the indices are still going lower or going sideways. You'll start to see things begin to outperform, right? And it can't just be one or two stocks, right? It's nice when one or two stocks do that, but you want to basically watch for some different, for groups, right? We've seen that a couple times when the S&P or the Qs have approached the 20-day moving average or 50-day moving average. And yes, you start to see more setups, right? But they've been some traps, right? And that's because, the Fed is tightening, right? And we're in a tightening cycle. So you've got to be aware that, hey, just because you're seeing, more setups than you were a week ago, right? They have to carry forward, right? They all can't stall, after a day or two of rally. Okay. So that's important too, right? And dipping a toe in rather than going, 20, 30% back into the market, because you've got to continue to monitor and watch and see how it plays out. Also watching the sectors, right? I'm going to talk about scanning. That's the next thing I'm going to talk about. But that's my first scanner that I look at, once over the weekend. How many sectors are below the 50, the 200-day moving average, right? If they're all still below the 50 or 200-day moving average, right? That's not a lot of green shoots in the market, right? But if you start to see 3 or 4 sectors begin to kind of break higher, even though the S&P is still going sideways, well, maybe you might be onto something, right? What sectors are they? Are they the utilities and the consumer staples, right? Then that's probably not what you want to see, right? That's not the best sign or the healthiest of a market, is to see the consumer staples lead. Doesn't mean you can't trade the consumer staples, but for overall market dynamics, it's not probably something that you want to see. Right, and the setups in single stocks. Another thing I always get asked, and I take the requests all the time, chart requests, right? If you have to look at a chart for more than a couple seconds, right, and if it's not jumping out to you as a really good setup, then move on to the next one, right? You really want to see, as you go through charts, like, wow, it should tell you just in a couple seconds that it looks really good, right? It's now beginning to come out of a sideways base. It's retaking a moving average, right? It's got a runway ahead of it where it doesn't have resistance right in front of it. If you can't determine that in a couple seconds and you're analyzing this chart for 30 seconds, it's probably not the best setup, right? And there's so many stocks, right, to go through. So it's not like, you don't have to just look at 10 stocks, right? Widen your universe. One way that you could do that, and again, like, I know that Richard's going to do a presentation on this. I love the Stan Weinstein book too, right? He talks about stage analysis, right? What stage is the stock in? 1, 2, 3, or 4, right? That's very simple. I think you should be able to see that very quickly, right? Going through your charts, what stage is this in? If it's still in stage 4, then, it may not be done going down. Right. And I think that's another thing, going back to what I talked about in the beginning about, making sure that this year has taught you, right? Going after names that are still not done going down, right? I saw, so many traders over the last year. I don't see them doing it anymore, but, I saw PayPal over the last, going back 4 months ago. Oh, this is a great setup. I'm like, really? How is it a great setup? The stock's in a downtrend. It's below the 20, the 50, the 200-day moving average. That's not even looking at the chart. If it's below those, there's no way it's a good looking setup. No possible way. So not to pick on PayPal, but I don't say a million either, but there's a lot of stocks. They're not done going down, right? Because it's not being predictive. It's just saying, hey, this is still below all the moving averages, right? Know what stage it's in and whether or not it's moved on from a stage 4 to a stage 1. Very, very simple. So scanning, right? So I think we're covering a lot of subjects here pretty quickly. But scanning, one of the first things that I like to do, besides the scanning of the sectors, right? And I do this a couple times a week, right? And this is where the little bit of research and the work comes in. But just look at 20-day moving average. Just look at 20-day new high list, right? You don't have to put many other parameters. And I use Finviz, but you could use a lot of different trading applications to do this. Finviz, there's a free version. There's also, you could pay for the, I don't think they charge much for the subscription, which lets you do a few other things. But just look at stocks. Maybe look at stocks above, the price of $15, $20. Make sure that they've got some volume to them. So average volume over 100,000 a day, and look at what stocks are above their 20-day new high list, right? First of all, is it a decent amount of stocks, or is it just a few stocks? And what sectors are they in? So that's something that should jump out, right? We're starting to see some areas kind of get above those, the 20-day and the 50-day, which is another scanner that you could use. What names are above the 20 or the 50-day moving average, right? We want to concentrate on relative strength, right? I don't want to concentrate on relative weakness, but I don't want to concentrate on, problem childs, that in terms of a stock that's going to take another 6 months. Time is money, and you don't want to be sitting with names that who knows when they're going to turn around. Right? Is it years? Right? I hear this expression, and I'm not mentioning any names, but hey, a 5-year time horizon. I bet you these stocks will be higher. 5 years, right? Who wants to lose money for 5 years, right? I don't want to lose money in any time frame. Forget it, short term, mid, a couple years, or long term. Right? Who wants to lose money for 5 years just to say that they're right? Right? So that's a big thing, right? Traders, newer traders, investors confuse this point. There's a big difference between being right and making money, right? I could care less about, being right, or proving a point that I'm right. I want to make money in this market, right? So setting yourself up. So I could bring up a couple examples of this. I don't know. So maybe we could show the first chart, and then I'll go back to scanning. But one of the stocks from when I started, let's see if I can just bring up. I will bring up, I love to do this example because, again, it's when I started my trading career, but Cisco, right? Okay. If you said back here, so first let me back up, because sometimes I jump ahead of myself with my thoughts. But this was a huge stock for 1999 and 2000. This was a darling of the dot-com bubble. Now it didn't go out of business, right? It hung in there, but if you would have said, hey, I'm going to buy this stock at $40 because it was trading at 60 a couple months ago, right? And I'm not going to sell it because I want to be right. Right? Well, look at the time on the bottom of the screen, right? This was, maybe you bought it coming out of, somewhere at the end of 2000, 2001. Well, I'm not going to sell it because I can't admit that I'm wrong, right? That means that you've had to basically wait 17 years to be right. Is it worth it, right? To admit that, okay, hey, look, I'm right. But you lost 17 years, right? And all you have to do is say, okay, well, look at what the market did over that time, right? By not admitting that you were wrong back in after a month of that trade in 2000, 2001, right? And if you held on to Cisco, rather than looking at some other stocks, look at what the overall market did. All right. So yes, the time, the opportunity cost, right? I don't want to be in a group of a group of stocks that's going to take 5 years to turn around. I mean, that's some of the worst, advice that I've ever heard. Oh, stick with it. It's 5 years. We're going to be back. We're going to be back. Forget it. You have the confidence and the trust, and trust in your process that you're going to be back much quicker than that if you adopt a disciplined trading system and you put the work in. So so looking for relative strength names that are above the 20-day, 50-day moving average. You could, if you want to put in the fundamental, a little bit of the can slim approach, you could put in Finviz, EPS sales growth over 15, 20, 25%, whatever you like. But also put in the criteria of above the 50-day moving average, right? That's going to filter your results in too, so that you're looking at a less of a universe of stocks. We do want potential new leaders of this market, right? Right. We don't want the ones that may not make it. Option flow. right? If you guys like watching option flow, I use that specifically for trade ideas, right? I'm not really looking at to say, oh, they must know something and so forth. Sure, there's going to be some orders that they're going to know something, no doubt about it. But you have to put that in the grand scheme of things. The majority of trades that you see on the tape and option flow, they don't know anything, right? So what I basically do is just like using a scanner with the 20-day and the 50-day moving average, right? You kind of filter it into your system. So, oh, interesting. They bought, 10,000 Qualcomm calls going out, not just next week, but 2 or 3 months. Well, bring up the chart of Qualcomm is, so you might find something, right? So it kind of goes with the last bullet point of, being clever and creative. Part of the time what I'm doing when I'm scanning, which I'm doing like after the close, by the way, I'm doing sometimes at 7 o'clock, 8 o'clock at night, is, I'm going through the new high list and so forth, but I may find a group of stocks that wasn't on my radar. So sometimes I go off on a tangent. It's like, okay, well, this stock in healthcare or biotech is making a new high. Well, okay, well, what about, hey, I haven't looked at this stock in a while. What is that doing? Right. So I kind of veer off a little bit, and it's fun to me to kind of go through and say, hey, I found this. No one else really found this setup. So that's where I kind of really get interested in the market, is where I come, I basically will find something that's trending that no one else has found it yet. Right. So that's the kind of competitiveness for me. But I love that kind of stuff. I love to find when, new setups that, a group of stocks is doing something new, and then going into that sector, going into that group and saying, wow, this one really looks good, right? Because believe it or not, and I'm jumping ahead of my presentation a little bit, but believe it or not, there's going to be new market leadership that comes out of this, right? For example, and I have this here in various different points, but for example, just a couple of years ago, right, 2020, new leadership came with stocks like a Peloton, right, a Zoom Video, and countless other ones too. But they may not be the new leaders this time around, right? So even like, those are pretty unique cases, because we were in a very unique situation with a lockdown and the pandemic, right? So it became very apparent that, hey, this stock is really going to be profitable in this particular situation where people are not going to work, people are not attending conferences in person anymore. Zoom is going to be a big stock for that, but the situation's changed. So even though when you look at the top weights of the S&P and the Qs, right? Of course, the Amazon is up there, the Apple's up there, right? But they may not be the leaders of the next bull market. They may be, right? And that's where, you really want to tackle the market in an unbiased fashion. I'm open to those names. Apple could come out with something that could be, a huge revenue generator, right? The earbuds, right? They make a ton of, is that the right? I think that's what they're called, but they make a ton of money off of those, right? So whether or not those names are going to continue to have the growth that they're going to have, it's a question mark, right? But the price action is going to tell you a lot, right? But be open to newer names. One of the things that I look to improve on is really kind of taking newer names and being open to those new names and learning about them, right? Sometimes in my trading, I sometimes get stubborn, which is one of the worst qualities that you could have. But I inherit that from from my parents. They're both stubborn people, but you got to overcome that, right? And I, for a while, was like, oh, geez, I don't know this company. Do I really want to spend time in learning it? Yes, you do, right? You do want to learn what it does, and you want to be open to that being a new market leader, right? So going through and researching individual names, and that also helps you really develop conviction, right? You can't borrow conviction from somebody else. Somebody else says, "Oh, I really like this name," right? Well, and they've got their bullet points, and they've put out a thesis, but do the research to see if you can't borrow that person's conviction, right? They may be able to stick through that company through sideways markets. It's not easy to stick with names that are going sideways for months, right? So you have to have conviction in your ideas to know that, hey, you think this is a good company, right? And you've done the research with it. But there's a fine line with that too, right? You can't get personally attached to the company, right? I always give the example of the Amazon, right? So, for example, I think, I use Amazon, right? I use Amazon Prime and so forth, right? So I use the company, but that doesn't mean that I like the stock right now, right? Two different things: the stock, how the stock is behaving, and what the company is doing. There's a variety of factors that could make the stock not perform very well, but so you can't fall in love. Like, okay, great, use the company, but that doesn't mean that they're completely two different things: how the stock is behaving and the market that it's in, the trend that it's in, versus whether or not you like the company's products. So don't get married to your ideas. You have to have a stop price. All right. Also, what helps me too, when I get stopped out in a trade, right? Have faith in your system versus any individual pick. Know that your system, right? Your system should be ironclad. Ironclad. You should believe in your system, right? And versus any individual name, and that can kind of help you too, to kind of understand that not every trade is going to work, right? Did I mention alerts in here? Price is most important. We talked about that. Setting alerts, right? So very, very important. When I go through names, right, and even in this market, right, that's been very difficult this year. Setting alerts, right, and knowing when a name is breaking out of a level, breaking out of a resistance zone, right? So having this way, you're catching things, right? This way, you also don't have to watch every name and every chart. Have the alert set. If they don't go off, you don't have to look at that name again, right? Or you can come back to it in a couple of weeks, right? But you're saving yourself time. You're scaling your efforts, right? By not having to watch every single chart while the market is open. Also, another important point too, with the mindset, I get stopped out of trades all the time. Don't get angry at it. Don't get frustrated. Sometimes I'm just early getting into a trade. So as soon as I get stopped out of the trade, right, you could curse, you could do whatever, but put an alert back on that trade, back on that name, because you may have just been early. I had a stock do that last week where I got stopped out of the trade. The very next day, the stock was up and started to trend and do what I wanted to. So don't get frustrated. Make sure that you go back to that name. Don't get mad at the name, right? And that also comes with a little bit of experience and behavior too. To have faith in your system. Yeah, so I covered that. Review your results, right? You could either keep a trading journal. What I like to do is at the end of the week, I do a little bit of review of how my trades went for the week, but especially at the end of the month. Right, I look at my biggest winners, my biggest losers. Did I manage it well? What was the proportion? Right, I should have more big green bars on my P&L versus red bars. So that's an important step in the process. I also look, hey, what did the market do? Right, was I not catching the winners? Right, was I not being as thorough? Or did I do a good job? Was the market down for the month? Right, if the market was down 5%, right, and I was flat or even up a little bit, hey, I did a pretty good job. If the market was down 5% and I was down 8% or 9%, I did not do a good job, right? So these things kind of go hand in hand. So making sure you review your results. I post I've been doing this for a couple of years. It's just something that I've gotten used to doing, but I post my results at the end of the month, right? It really kind of keeps me honest, and it keeps me disciplined too. I'm not going to have a big loser, right? I'm not going to have something that sways my results because I held on to a stock because I was stubborn, right? If I know I got to report my results at the end of the month, sometimes maybe I'm too disciplined, right? And I get out of trades that end up being winners. But at the same point, right, in this market, it's important not to have the big losers. All right, so all of that, right? A lot of mindset, a lot of practices that I do either during the market, while the market's open, or the scanning and so forth while the market is closed, it's important. But you also need to have some type of technical system too, right? And that's very specific to me. I've given presentations just on the market webs themselves. It's using volume at price. I don't want to go heavy into that, but I do want to talk about some stocks today. You know, we could talk about a couple stocks of last year. We could talk about a couple stocks, you know, that I'm watching right now and kind of go from there. So let me just give you the background. The market webs, the technical system based on market profile theories. You know, again, like volume at price has been a big thing for me, using volume, time, and price to determine a technical roadmap, right? You know, this can be used with any product that has volume. Volume is very important to me, as of course price is, right? It really helps me to be a trend trader and follow a disciplined approach, knowing where it's breaking resistance, knowing where it's taking out support, so on and so forth. All right, so I think that's it also, I do look at the indices in the short term, right? I want to know when the indices are coming upon some short-term resistance, right? I could be a little bit more aggressive with taking profits when we're at resistance for the day, and then I can kind of monitor. So you could always get back into your trades, right? But right now in this market, there's been so many times over the last couple of months, and specifically June, you know, that's how I kind of screwed up my results a little bit from June, was I just wasn't being aggressive with taking profits in trades. I also added to some trades at the wrong place. So again, it's always a battle of getting yourself aligned. It doesn't matter how long you've been doing this for. You still need to make improvements, and you still need to, you know, iron out some of those weaknesses, right, and get back on track. And I think so far for me this month, right, I've kind of exercised some of those things and areas that I wanted to improve on. So I feel better about that. You know, even though my results this month so far are not sky high, but I've heard several different speakers talk about, hey, well, it's not so much about your results, but, you know, in terms of P&L, but it's also how well you traded and how well you followed your system. So again, this month, I'm not looking to like crush it with 20%, you know, returns this month, but I'm looking to make sure that I adhere to my rules, trade well, and the results will follow. And so far, I'm on par with that this month. The market webs also allow me to be an idea checker. So I'll always have ideas, right? But I have to know where I'm right and have to know where I'm wrong in the idea. This market is just too dicey, right, to think that all my ideas are going to work and I'm just going to let it fly. That doesn't work. Overhead supply, we're going to be dealing with that as, you know, certain names are basing and starting to kind of move higher, right? They're going to deal with overhead supply. So taking targets, the market webs help me really, you know, take targets at where I think that there's overhead supply, and they're really good for swing trading. So let me bring up a couple names, right? And, you know, honoring the trend. I've talked about that in the presentation, right? This was one of my favorite stocks, right? I fell in love with this stock last year. This was INMD. You know, why did I fall in love with the stock? Because it kept trending higher. It kept making new highs. It was so methodical. It would check back into what I refer to as the bottom of value. And then it would rally, or the 50-day moving average would check back in, spend some time, rally, make a new high, check back into support, rally, check back into support, rally again, and then it finally topped out. And this was back in November of last year. And once it broke, it was game over for this stock. It never returned. So again, having, you know, a system that tells you, hey, I love this name, right? And I want it to continue. You know, I want the trend to, you know, no one knows how long a trend is going. That's the one thing, that's the one beauty about trends. No one knows when or how long a trend is going to last for, right? So we want to stick with it for as long as it does. But once this thing broke its 50-day moving average, it was pretty decisive. And then every time it tried to rally, it had some counter trend rallies, but it was a very feeble attempt. You know, there was something to trade. You know, this went up a couple bucks from here, but the trend was down. And, you know, so this is the first time that this name, since all the way back to November, right? And this is where patience comes in play, right? So just honoring the 50-day moving average, right? This is the first time that this thing has started to show that it could be stage one, maybe stage two, but it's not going to be easy, right? First of all, it's still below the 200-day moving average. So it's going to be a fight all the way through, in my opinion. So you got to know where to take your profits, right? And if you look, so I use multiple time frames. I use the 1 hour chart, I use the daily chart, but you could see last week, make sure I've got this set up right, but you could see last week it kind of stalled out a bit, right? These red lines are version point of controls. They're where there's been a lot of there has been a lot of volume before. They often act as gaps, right? So the price action may stop there at different levels, right? And you could see this also on the daily chart. There's another one in front of it. So it came very close to taking it out, but I would be I would be a seller, right? Maybe not the whole trade, but in this market, I would be taking profits 29.57, right? And then kind of watching and monitoring, right? But I just wanted to bring this, the main reason why I wanted to bring this stock up is you may think it's a wonderful stock, and it may be fundamentally, they may be still growing their revenue and their sales, right? But there's also valuation issue, right? And I'm not going to go into, valuation and so forth, but when the price action changes, it changes, right? And when the trend changes, right? So it has not come close, right, to changing up until just recently, this last month, right? So the best thing right now, when you see this type of thing and what we've seen over the last year, I'm kind of recapping this year, is to wait and be patient for these names. All right. So one of the sectors that I find really interesting, because it's not a consumer staples, right? It's not a utilities, right? But I love to see I love that biotech is making a move here, right? Biotech is a riskier area of the market, right? This started to break. This was one of the signs back all the way back in here. And I believe that sometimes biotech does lead moves, right? So this topped out all the way into the February of last year and hasn't really resembled any major move until recently. Now, I'm not totally convinced that the bottom is in here, but it didn't make a new low when the S&P did. So it was showing some relative strength, and you could look at the relative strength between, which I like to look at from time to time. I think I've got a chart in here of XBI and SPY, right? Here's where biotech really began to break down, right, and show relative weakness versus the overall market. But it's the last couple of months, it's been showing relative strength. Now, it's got more work to do, definitely. So it's tough to say right now that XBI, has definitely bottomed, but it's been hanging in there, right? And even last week, some other areas of the market started to participate, specifically on Friday. Biotech wasn't a huge, area the last couple of days, but that's okay. When you go through some of the individual names within this group, right, they need to kind of, in this market where the Fed is still tightening, you're not going to see these names just jump and go higher and higher and higher without pulling back some. And this is where patience comes into play. I caught this name when this name broke higher, and I'm like, geez, I don't know what to do. I don't have any position on, but I really want to get involved in it. So, this market right now is putting on a lot of starter positions, right? And this day I established a position, but it was pretty high up. So this is where you kind of have to use a little bit of your judgment and your trading experience to be like, hey, this market right now, do you really want to be chasing a name that's up 5 or 6%? And the answer to that is no. But I want to get just a feel for it. So I put a starter position on, and I was able to kind of quickly take some of the trade off into this. But now it's monitoring, right? And I love the fact that, the volume has kind of there's been bigger volume on the move higher. It's come back in and it retested this value area again, which looks at the volume and price of the previous period. So it's come in and tested quite nicely, and it's holding in. So, not to say that this is going to blast off to new highs, but it's, Richard, is this name in an uptrend or downtrend?
Clear uptrend, especially compared to the rest of the market and where it's at. This whole sector, as you kind of mentioned has been definitely outperforming relative to the rest of the market.
Exactly. Right. And that's the key, is that, you're going to, like, to me, it's an easier trade than worrying about, I'm going to bring up a chart of roadblocks, but roadblocks looks interesting here, but it's going to have to battle through overhead resistance. This is not, right. This is kind of almost in price discovery, right, where it's making new highs, right. And we want to find names that are trending, right, and when they come back into support, right. So we want to be careful about that. We don't want to be chasing. We want to kind of wait for your pitch, wait till it comes into support, and then start to kind of begin to, accumulating the position. Right. And this is one of my names for next week that I'm watching. I mentioned roadblocks. All right. So that's the issue with this name. So, going back to, like, what stage is this in? It has gone sideways for a while. Right. So it's nice to see it go sideways for a while. It's starting to kind of move up, but I'm not convinced. Right. I watched Zoom do the same thing. Right. Zoom started to kind of come out of its base a little bit. Right. And then it lost all of its momentum here, and it's back below the 50-day moving average. So it's a hands off. I could put an alert back on this one, but it showed some kind of green shoots here, but not anymore. So I'm not convinced with roadblocks, but I know that we've got an area of high volume that this thing hasn't revisited at 44.68. I also know on Friday, earlier, that as far as this thing went was another area of high volume, right? So that was a great place. So if you're trading this name, you're going to want to know where to take targets, and that's something that I think my trading system kind of allows you to do, to kind of notice where there's some high volume areas that haven't been revisited, and they might act as overhead supply, where you've got what's called dead bodies lying around, people who are long that are like, hey, I'm going to get out where I originally bought. Hey, I'm back to break even, right? That may be somebody who wants to exit. So that's why we look at some of these trends where there's a lot of overhead supply, because somebody may be looking to exit rather than get into the trade at this point. So again, just one good example. Another one that I've been in for a while, and again, this kind of goes to conviction, right? Even though this stock has been performing very well, it hasn't gone anywhere over the last, going back to where it made its previous high. Certainly, it's kind of gave a little bit of opportunity to buy the dip, but this is something where if you don't have high conviction in, you're probably not gonna stay in it, because it hasn't been easy, right? It's nice. It's been outperforming, right? You look at this in a chart of the Qs, or you look at the chart of the S&P, it's doing something different, but it's certainly not easy. So again, patience is key here, because, going back to, like, don't short a dull market, right? It really didn't break down, other than in here, it was possible that this thing was going to start to move lower. But, you got to be kind of relaxed in some of these trades that aren't doing anything, right? It's also nice to be a stock trader sometimes over an option trader, right? And in option trades, the meter's always running, right? There's always theta decay. It's nice to be in a stock trade, would be like, hey, set your stop, and if it doesn't, you could bring up your stop. You could definitely use a trailing stop. That's important. I didn't really talk too much about that, but adding, stop, setting them back to, if it's a profitable trade, making sure that you don't give back those profits is very, very important right now in this market. Is always important, but especially right now, because the market is just a higher level of difficulty. But, I'm in this trade. I did take a profit target on Friday, right? Because I know if we get a difficult market and it kind of checks back to maybe 68 or so, or maybe even a little bit further, I'll probably add back to it, as long as it looks somewhat healthy. But you could see it. I knew where to take my target. Took 72 is where I took my last target in this, and my system basically told me to do that. Another name too that I find that's also on my watch list is Shockwave, right? In the same group, right? Also took out a VPOC, virgin point of control, right? High volume area, right? Where the market hasn't revisited. Well, it's digested. Now, it doesn't mean it's going to fade all the way back down. It really depends if buyers are going to kind of pick up the slack here. So that's what I'm waiting for. I'm waiting to see what the institutions do. And if it can, if it can get over this hump, right, and that level that I just mentioned, you might have you might be into price discovery where this thing is going to start making new highs. So again, monitoring. You don't have to be in every single trade because I'm not in this one right now, but I'm watching it. And that again kind of goes back to the overall trend of this market. I don't want to, even though I'm finding some setups and so forth, doesn't mean I want to have every trade on. UTHR is another one too, right? Again, it's been kind of boring here the last couple of weeks. This is a good example of what I just mentioned. I was in this trade, right? Really nice pattern. Looks like a bull flag, doesn't it? It actually started to lean that way, and I started to get excited. I'm like, hey, here it comes. Here comes the next leg higher. Nope. Broke this, and I got out of my trade. I got disgusted. I'm like, damn, that really looked like a really good setup. But hey, every setup isn't going to exactly work. But I stayed with it. I monitored, and I was like, I wasn't even in it. I don't think. I was like, damn, look at this thing. Maybe that's a false breakdown. The market was weak then, so I'm back in it. I don't think I've hit a profit target since I'm back in it, but there hasn't been any reason for me to get out of it. It got close on Thursday, but it's hanging in there. And this one I'm going to see through. It's not an expensive name too, but look at the difference. I would rather be dealing with something like this where you're in price discovery. You're not dealing with overhead supply where people are like, hey, I got back to my break even. I'm out of the stock. Right? It's just a lot easier to me.
Perfect. And Christian, we've got about 10 minutes left. Do you want to answer some questions now? I think there's a few
absolutely.
good ones. Perfect. So earlier in the year, you kind of started things out with a drawdown, and you touched on that a little bit earlier in your presentation. I'd love to hear about your mindset, what you were thinking about when you were going through that, and also, how you progressed from that point.
Well, yeah. So, Richard, I told you I didn't want to talk about January. No, I'm just kidding. No, listen, this is important to go over. I had a terrible month of January, and I was making mistakes like I hadn't made in a long time. I was watching my P&L too much. I had a couple names that, like, at the same time, just break on me. Even one trade, as soon as I entered it, I didn't put an alert to the downside. And I even remember, like, one of the names that did this to me, and I was like, I cannot speak of a name that looks really healthy here, right? The managed healthcare space looks great, but this is a reminder that anything could happen, right? I was in Humana, and I was like, what is going on with this name? And it just kept very quickly, like, we're talking about in the time period of a couple hours, right? So if you weren't in front of the screens, 410 down to 360, no problem, right? And it did take some time to recover, but I was dealing with a couple other trades like this that were going on too. So I just had a horrific time where things were going against me. Part of that is, well, it is my mistake by not putting on a trade and not putting on a downside alert, right? Because I was watching other names, and again, this market will do whatever it wants to do, even though you're like, oh, Humana, that's not a high volatile name. Well, apparently there was a story that was going on there. So this market will humble you. It will do whatever it wants to do, whether you think a stock, whether you think a group that's lower volatile, but it just kept going down. And I think I added to it once because I didn't believe it. And by the time I unwound it, I had a very big loss on my hands. And so that was completely my fault. And I also had like 2 or 3 other trades that just, for lack of, for whatever reason, they were also not acting well. And it was very quickly where I dug myself into a hole the beginning of this year. And, I realized too, this comes back to your own trading style and what you need to improve on. But I'm not very good when the market changes directions. In terms of, like, if there's some mixed signals, yeah, right? I should have been out of this market a little bit earlier in January, right? By the time that I saw the writing in the wall, I was just a little bit late. And, this happens very fast, right? And I've been in markets before where this has happened to me, and I do take drawdowns, but as long as they're manageable drawdowns. So January ended up being a nightmare for me, and I had to come to terms with that, right? And it's, hey, what are you going to do next? Like, so my game plan was, going back to what I've presented so far and a couple of the slides that I've had is, you've got to forget about what happened to you in January. You're not going to make this back in 1 month. So I just kind of said, going back to that Bill Belichick approach, hey, well, I'm going to focus on, you know, uh, winning February, right? Get myself back to a positive month for February, right? And I've done that every month since, from February onward. Maybe not, they haven't been huge gains. June, I was down 2%. That's been my only negative month since January. And it is what it is. And I actually outperformed the market. Would I have liked to be positive? Yes, I'm a competitive person. I was not happy that that I was like, damn it, I didn't get June to be positive. But in the grand scheme of things, does that really matter that much? No. You do have to have that perspective. Up 2% in June, I wasn't going to do a party either, right? Like, it's, if I did make it to positive for June, it wouldn't have, been any more significant otherwise. So the main thing was to take away from June as well, and to be like, hey, move forward, figure out those things that you didn't do right in June, and get yourself right for the next month. So you've got to kind of wipe that slate clean. Just as I know a lot of traders have had difficult times this year, but you've got to move on. You can't dwell in, oh, geez, I'm up or down this much this year. I've got to get back to forget about it. Do what's right going forward, and the results will follow. But you cannot look in the rearview mirror in trading and think that you're going to automatic like push here in this ridiculous sideways market and be able to come back right away.
Perfect. And you've had a theme of sports throughout this presentation, so I want to ask you, what's your favorite sports movie or sports in general quote that relates pretty well to the markets?
Well, I mean, there's so many. I do like I do like the Moneyball, and I like picking just different tidbits of being competitive. I love the movie Hoosiers. I do love the underdog stories where hey, listen, we're retail traders, right? There was this big thing that happened a couple of years ago. I don't know if you heard about GameStop and all of I wasn't really, I didn't trade GameStop, I didn't trade AMC, and I was kind of like, and I was happy that there were a lot more market participants, younger traders in. But I'm like, you don't have to take up this battle with the hedge funds. You can beat the hedge funds fine, but it's not always a zero-sum game, right? Develop your system. You're going to you could outperform the hedge funds and do better by doing it the right way, and not really being malicious or being, having to say, hey, I'm going to kick it to this person or that, do what, come up with a system, and you're going to take pride in like being the little guy and being able to outperform the market and so forth. But it's outside of this presentation too, but you do have an advantage over the institutions, right? You can wait for your pitch. You don't have to be invested in stocks every second, right? You've got a lot of flexibility as a retail trader to kind of overcome, and be the underdog, and be very good at what you're doing.
And to finish things off, what kind of general advice do you have for any traders watching, so they're ready when things really change, or just, general advice to improve their performance as well?
Yeah, I mean, I think really enjoying the process, right? I mean, this market is it's always fascinating to me and interesting to me. So even though okay, this year may not be the best trading results, I mean, this is a fascinating time in the market. So, make sure that as I said in the very beginning of this, make sure that you're learning, and make sure that you're building the framework for when a better market does come along, and it will, to be able to kind of set yourself with, hey, I learned about energy stocks this year. I learned about agriculture stocks this year. Keep them in a watch list. That's going to come back to be useful to you, right? The semiconductors, right? I haven't really looked at the semiconductors in a couple months in terms of, looking, going through that. And I brought up my semiconductor watch list, right? And I've got those tools from another market time where the semiconductors were trending. So I know which names to kind of go through there. So continuously to kind of learn about companies, they're going to come, like there's certain things that are going to come back that you're going to want to go back to in terms of, groups, stocks, and so forth. But be competitive with yourself. Also, understanding that it takes time. Most of the people that have been on and been presenting, they've been through all different types of experiences, right? And it's nice listening to these types of conferences where you can really jump on the learning curve faster than traders did 10, 15, 20 years ago. You have that advantage, but you're still going to it's still going to take time. So be patient with yourself too, not just the market. And overall, again, be disciplined, right? Understand that you're going to have ideas and so forth, but understand that the market is bigger than you. You can come back to names, right? Don't get into this idea that, hey, I'm not going to sell because that I have to admit that I'm wrong. You've got to have a little bit more confidence in yourself, right? That you could take a small loss. It's not a big deal, right? That comes with every trader has to get over that fear of, oh my God, that means I have to admit that I'm wrong if I take this trade off. So what? Get over it, right? And that's the goldfish as well, and I'll bring that one back as well.
Absolutely, and there's a good comment from the chat. If you build it, they will come from Field of Dreams, and then he goes on to say, build your system and the money will come, which I 100% agree with. So Christian,
I love that.
Thanks so much. One. Enjoy the process. Perfect. That's a great thought to end it on, and thanks so much for your presentation.
Thanks for having me.